Hello and welcome to this Weekend Investing Daily Bytes episode. Let me just share my screen. Give me a moment. So, market has been on a tear since this financial year started, and it is nice to see some continuity on this up move. And big names in nifty stocks are leading this rally, and one of them is ITC. So if we look at the ITC chart, just see this chart from beginning of the calendar year, and you will see that there was this kind of a pole formation here early in February, and now it has been flagging here. So in some sense, I think this is ready now for the next move up. Maybe it's a 50 rupee move up, but it does seem very strong, ITC as well as LNT for that matter. And these are some of the strong stocks that can take the Nifty up. So I wanted to showcase the ITC chart. This is good for your watch list, and if you find a trade setup, today I think was a good day to buy at the close. I think it is now headed for a new high, but let's see. A stop below today's low would be a good stop. So this was on ITC. Nifty, you can see almost four sessions of going up. We had repeatedly said during this consolidation that a breakout on either side will take it to at least 17,600 levels. We are very near that. Maybe tomorrow we may try to flirt with this trend line and take rest here. So far, the strength remains reasonably robust. Today's heat map, you can see HDFC Twins really going very hard up, 2.5 to 3% up, levers up almost 2%, ITC up 2%, LNT up 4%. Grasim, Sun Pharma, these were some of the other stocks that were helping the Nifty go up. IT stocks were also up, TCS up 1.2%, Bajaj Finance also up. So a reasonably good day. And after these three sessions, one was thinking that maybe the continuity may not happen given that there is weakness in the US markets, but our market is belying that trend. And I think as I showed you in one of the previous sessions, the dollar index is about to break 101, and that is, I think, in my view, a pivotal moment where emerging markets will start to go up. So it is at 101.5. If that happens, my own sense is that precious metals, which are already going up actually, and emerging markets will actually get a very nice leg up. Let's see how that hypothesis plays around if that 101 level breaks down. If we bounce off from this 101.5, then of course we'll have that pressure back on the Indian market. Within the sectoral data, you can see FMCG stocks leading the rally. Of course, ITC and levers doing most of it. Also, Britannia. So 1.4% up. IT stocks doing 1.2% up. Pharma stocks, after a while, have come back 0.9% up. Infra stocks up. Consumption up. Real estate up. What was lagging? Energy, autos, and PSU banks were dragging the market down. But this is more or less, I would think, some corrective nature of after 2-3 days of rallying, because for the week they're still quite nicely up. So a good day overall, where most sectors were doing all right. Within the larger broader base of the market also, you can see mid cap index is trying to go up, although not as buoyant as the large caps. It is kind of stagnating. In fact, today was an inside day on the mid caps, could not make a new high versus yesterday or previous session. But again, I would presume that a good leg up may happen towards 36 3700, 30,600 or 30,700. Small caps also are rallying hard. Four sessions has recovered all the damage post mid March, and that also may go seek some resistance there. And Nifty Bank has been leading the entire pack. It has already reached that resistance line, and it is a crucial test now as to whether we'll see a breakout here. And I think this breakout will coincide with the dollar index falling, but let's see how that pans out. Because one thing you must always note and also try to see on the charts is that the financial stocks will lead the economy. So whenever the market is going up rapidly, banks will do very well. Whenever the markets are going down badly, banks will be leading the downcharge also. And that has been my experience and observation also. Within the large and mid cap indices and strategies, Nifty up 0.9%, Nifty Next 50 and CNX 200 up 0.5 and 0.8%. India top 2 and doing very well today at 1%. NG 50/50 doing extremely well at 1.5%. MI Evergreen and NNF 10 also gaining ground. Mid and small cap strategies, the index was up 0.3%, MI20 leaping up 1.1%, MI50 also up 0.6%. So good gains coming through here. In the small cap segment, also reasonably good gains coming at 0.6 and 1.1%. In the all cap segment, the market is up 0.7%, but the strategies here are trailing. I think the mid cap part of the market is inhibiting that current run, and also that many of these strategies are sitting in cash, MI30 and MI all cap especially. This is a truncated week, so many stocks are subdued. Friday is again a trading holiday. This is some insights about very long-term, accumulation zones. So this is a Nifty chart for the last 25 years, and the blue line you can see here is just a simple, exponential moving average of 200 weeks. So it's a 200 uh, WMA, not 200 DMA, but 200 WMA. So when you want to see very long-term patterns on moving averages, you can shift from daily to weekly, and you'll be able to see. So what this is showing is that in the last 25 years, whenever the Nifty was down below the 200 WMA, whether it was the period 2001 to 2003, you remember that how amazing that golden period was for accumulation of stocks, wherein post that you got a 6x gain in the Nifty itself. Then you had the financial crisis, the GFC, and of course, if you accumulated during that fall, uh, you would have got a huge gain again in the next couple of years. Then there were minor opportunities in 2012, 2011, 2012, and then again in 2013, and again you got some great opportunities. Again, you had at the end of demonetization, you had a fall, and again you had a great opportunity, and then the most recent one being the COVID fall, and you had a great opportunity to buy in this region. And I'm saying in general, this region below 200 WDMA, 200 WMA. Not saying that as soon as it crosses, that should have been the point you buy, or at the bottom you could have bought it, because nobody can buy the bottom. But in general, if you had bought this area of the market and held on, you would have made huge profits. And not just picking stocks. Even if you held allocated to any strategy, for instance, weekend investing strategy, if you allocated and they were mostly sitting on cash at that point of time, as and when the stocks would have gotten into these strategies, you would have gained out of that. So basically the idea is that your money should be allocated to the market and ready for allocation. So that is the sort of theme for this chart. Now, this chart again, if we see for gold, and I've just extrapolated the INR gold price here, you can see that in the last again 20, this is a chart of 45 years. So what almost 50 actually. You can see here great opportunity came in 1976, then in 1982, then in 1986, then in the dull period in 95 to 2002, then again in 2013, 2012 to 2015, and some recently. So whenever you find that the 200 WMA is broken and the market is kind of just not doing anything, is just going sideways, uh, that is a great time to accumulate for long term if you are a buy and hold kind of a person. So allocation towards different asset classes should be there in your portfolio. I'm a huge proponent for adding on gold and real estate to your portfolio, and I have done that my entire life, and I have not regretted it one bit. Uh, you may get a slightly lesser returns in than a pure equity portfolio, but you have a very nice peaceful sleep as well. So of course you will need to talk to your own advisor, financial advisor, to see what kind of asset allocation you can or you should do. But this is my sort of advice in general. So thank you so much for watching this. Let me quickly go see if I have any queries and questions that I may be able to answer. If I do, I'll just go through it. Just give me one more second. So today I don't have any questions on this. Thank you so much for joining this session, and I will see you in the next one. Bye.